Hey, it's Giuseppe with Zenith Home Loans. I hope you're doing great. So in this wild spring market of 2021 in Denver, we're seeing homes being bid up, extreme shortage of homes, so being bid up 10% or even more, which is causing a lot of potential issues with appraisals and homes not appraising at that higher purchase price. So the buyers are often looking at options to cover an appraisal spread. And I wanted to do this video to kind of demystify this a little bit. This actually came from a transaction that we had that we're working on this week, where the appraisal, the home was bid up, which of course is the norm. The appraisal came in significantly lower. The buyers were originally doing a 20% down payment, and because they had written a sizable appraisal gap coverage in the offer to get the offer accepted, when the value came in low, the first thought was that, while we're going to have to bring $50,000 extra to closing, which is a lot of money and not something that anybody really wants to do. So I wanted to show you how we work through that, and hopefully can help in structuring some offers. In this market, there's really nothing more important than making sure that buyers, lender, and realtor are all on the same page. So the option on the left here, so when we're making an offer, it's important to consider what will the home realistically appraise at. In this option on the left, these buyers were buying a home at $550,000, doing a 20% down payment. So they were borrowing $440,000, about a $2,200 payment, and they had budgeted about $117,000 or so for the purchase of this home. So when the value came in low, let's say it was $500,000, they automatically assumed that they would have to purchase or bring, that additional $50,000 to closing, which was very stressful, of course. So I wanted to show the couple of options that we relayed to the buyers, so that possibly in making an offer moving forward, we can also use these strategies to make the offer as attractive and aggressive as possible. So in this case, we settled on this middle option here. These weren't the exact numbers for the clients, but let's say you make an offer, the home is listed at $520,000, you bid it up to $550,000, with the goal of doing 20% down. So if it appraises at $550,000, here's your payment and here's how much money you need to buy. But if appraises low at $520,000, and let's say you make the offer with a $30,000 appraisal gap, that does not mean that you need to bring an additional $30,000 to closing. It just means that we can move into one of these solutions, which have mortgage insurance, but we're buying it out at closing, so it doesn't affect the monthly payment at all. So in this case, I showed the buyers how they could, with this lower value, end up with the same monthly payment and essentially bring a couple $1,000s more to closing, which is the amount needed to buy out the mortgage insurance, but no change in price, no change in loan amount, no change in payment. And yes, they're bringing a little more to closing because now the loan of $440,000 based on the value of $520,000 is not a 20% equity position. So the loan does require mortgage insurance. You can pay it monthly and keep the amount due at closing the same and have a little higher payment. Or another option is to do a one-time mortgage insurance buyout, which is what this is. So for a couple $1,000s, they are getting rid of the mortgage insurance for the life of the loan. And so they end up with the same payment, same loan amount, same rate, same payment as if the home would have appraised at $550,000, and they didn't bring $30,000 extra to closing, just a couple $1,000s extra. This can work even in a more extreme example like column 3 here. So in Denver right now, in this kind of super popular price range, it's common for homes to be bid up 10%. So let's say that the home is listed at $490,000 and you offer $550,000. Okay, as long as, if the home appraises at $550,000, again, we're back at this first column. If the buyer's okay with those figures, they can technically even if the value comes in as low as $490, they could have the numbers look exactly like this. Same purchase price, same loan amount, so same down payment, same monthly payment. Again, we're going to take a little extra money, buy out the mortgage insurance, so now they can bring about $4,000 extra to closing, not $60,000 extra to closing, buy out the mortgage insurance, and end up at the end of the day with the same exact payment as if they would have, as if the home would have appraised at that higher $550 purchase price. So this doesn't work for everyone. I'll do another video. It doesn't work if you're doing the bare minimum down payment, say 3%, or you're doing a first and second mortgage and you're doing a 10% required down payment. It doesn't work like this. But if you're doing 10, 15, 20% down, there are solutions, if we think outside the box, to be able to get the buyer into the home and have the same payment that they were thinking and be able to write a super aggressive offer. If you think about it, on this third column here, the buyer, if they were okay with these numbers, could write an offer on a home that's listed at $490 for $550, issuing or with a $60,000 appraisal gap guarantee, because we know it's going to appraise at that $490 level, and end up with the same exact payment as if the home would have appraised at the $550 and only spent about $4,000 extra out of pocket the day of closing. So if I can help, please reach out. This is not the easiest information to grasp, in my opinion, but it's important because we can help the buyers get into a home in this wild market. Okay, thanks again, and we'll talk to you soon. Have a great rest of your day and good luck out there. See ya.